here now to discuss ETF evaluation and implementation in investor portfolios is Francis Sims. He is the Senior Vice President at NorthCoast Asset Management. Thanks so much for joining me today, Francis.
Thanks for having me.
All right, so when investors are evaluating ETFs, how should they go about doing that? Because as you know, there are just so many of them out there. So what steps should investors take to evaluate them?
It's a great question. For us at NorthCoast, I think we first start off with, most investors are kind of bifurcated in their mentality. We're at war with ourselves a little bit in the sense that we want reward, and we know that we have to take risks. So they're kind of butting up against each other. It's sort of separated, but it coalesced together at some point. So the first thing I think for a client to do is really assess the mandate. Like, what are they really after with that particular portfolio? Maybe it's growth, maybe it's income in this low interest rate market environment. Maybe it's handling a concentrated stock position. Maybe it's a myriad of different things, but first setting forth the mandate. And the analogy I always give clients when you go through this process is to think about you've got a job opening, right? Within the family business, and you've got to hire somebody. What do? You got to define the role clarity first, then you got to go out there and assess all the candidates. The same thing applies when we look for quality candidates when there's a mandate or a role on a specific portfolio. So when we design things, we have to look at what index is it actually tracking? What's the sector allocation? We care about the cost, right? So do clients. So we're looking at the commission, the bid-ask spread. We're looking at the quality, duration, et cetera. So we go through the resume of all these ETFs and deep dive down to develop and build something that will fit that role and make sure it fits within the mandate of the job that we're assigning it. And that's why I'd say it's probably so hard to do, because you're right, it's so wide, but you've got to take the time to go through the depth, and that's one of the things that we're very good at doing.
And when it comes to two very similar ETFs, maybe they're tracking the same index or sector or theme, how do you prioritize the differences when you kind of peel back the layers of trying to decide between two similar ETFs?
Sure, I think the first thing we have to do is sort of answer the question of what's our market exposure, and that's really the backbone of NorthCoast, is for us to determine how far in should we be into the market or how far out should we be into the market. So the first thing that we're designing is we're kind of giving an overarching philosophy. And we track macroeconomic data, just all the big information out there to kind of give us an idea or a sense of, what's GDP doing? What are interest rates doing? The next thing that forms that decision is sentiment. And that is, what are companies doing with their money? That's what are investors or people doing with their money? Are they spending it? Are they having a good time? Are they saving it? Then that leads us right into valuation. And we've got to figure out, what's a company actually worth? Is the market too overbaked? Is it undervalued? Should we go in at this point? And the last thing really is the technicals. What is the market showing us? And that crafts this narrative or this philosophy that we have from our market exposure model, or what we call cash scaling internally. And then what we do is we go down through the actual individual ETFs. So that list, that quality list that I mentioned earlier, that's the filtration system until we get finally down to something that makes a difference, which typically I would say is cost. But there are 2,000 ETFs, plus or minus, in the United States alone. We do a lot of work with iShares, which happens to be about 350 on that platform as well. So it takes a lot of painstaking process, and as I put it, we're putting our hand to the plow every day, right? And we've got to get in there with the sweat equity and just go through these positions methodically and disciplined to finally arrive at one that makes sense based on not only the mandate, but on our market exposure as well.
Now, low cost is a huge draw when it comes to ETFs versus other vehicles. Now, how do you think investors should balance that draw of the low cost with getting the most value out of
Sure.
a product?
That's a good one, because I think one of the greatest things about ETFs is, it's a phenomenal innovation, right? We have all of a sudden, very quickly, you can allocate a certain amount of money to an index, to a specific, if we wanted to get so narrow as to get into biotech inside of a certain sector or allocation, we could do it within seconds. Right, a couple clicks and we're in. And I think what happens more often than not is that clients tend to get, or investors get overwhelmed at the width of offering, right? There's such a large inventory out there you sort of just abort and abandon all the other due diligence and you go, what's the cheapest thing available? It's not necessarily the way that we want to go. That is a factor to consider for sure, but you've got to put in the work to go in depth, right? So for us, the way that we look at structuring portfolios or ETF portfolios is first we look at the wide breadth of offering. We say, well, this is fantastic. We have a lot to choose from, but now let's go through the due diligence process. And cost is only one factor. I would say even beyond that, bid-ask spreads are important. What are the internal trading costs of that ETF? So the buck doesn't stop there. It keeps going down. And the challenge for investors is that it is easy to get in and it is easy to get out. So it's about, first and foremost, having the narrative shaped of what access do you want in the market, how far in should you be or not be based on risk, based on objectives, and then it's finding the right candidates to fit that quality of that mandate.